Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, June the 20th, the year 2018. Let's talk trading. Let's do price action review. I've been doing the why you don't get better at trading. I think we're up to 16 or 17 parts. So I'm going to give you a break from it for a day or two before we go back and revisit it. The reason I want to do price action review is because I've been getting questions, I guess, from some traders that are asking about, the rat zone and the buy zone and how to do it and, why do one versus the other, et cetera, et cetera. So I just want to do a price action review, and so then maybe the image will get a little bit clearer and you will see that basically there's only a couple of things we do when we trade. It doesn't matter what the system or method is. But actually, there is a third thing, and that's the risk and money management. You were probably wondering how I was going to slip this screen in here, but I'm getting pretty good at it. Wouldn't you say? We do it every day. Okay, price action. Let's look at this monthly candle. Here's our current monthly candle on the dollar yen. As you can see, right now it's an inside bar, which means the high is lower than the previous candle's high, and the low is higher than the previous candle's low. And so right now, all of the price action, all of the movement is within this range. Okay, so what does this mean? All price is doing is it's just ranging in here. It's coming up and reversing, coming down, reversing, going up, reversing. It's reversing within the confines of this previous candle. Okay, but let's go look at the week. And we can see here on the week, we've got the same thing. It's basically range bound within the previous candle. Let's look at the day. And if we look at the day, once again, we see it is range bound. The high is lower than the high, and the low is higher than the previous low there, right? It's range bound. Let's drop down to the hour. Okay, you can see something different happened here. It actually broke out of the top, only slightly, but it did break out. So, price action. Either the current candle is within the range of the previous candle, or it breaks out of the top and or the bottom. You can see this candle the previous hour, what happened? It broke out of the bottom and it broke out of the top. So it was a breakout. So all trading systems, methods are going to be one of two things. Either you're going to be reversing within the previous candle, doesn't matter the time frame, or it's going to break out. So if you go back to my older price action videos, you'll hear me saying the same thing, and that was years ago. So these things don't change. They just don't. So here, if you look at the buy zone, because somebody was saying, well, I trade to New York, so, where should I put the buy zone, et cetera, et cetera. And they had a couple of trades and they got stopped out. I said, well, the thing is, you have to look at price action. Okay. So here, if you look at the price action, on this one, it kind of broke out of that previous, here's our open line right here, this dashed line. And so you see here it went up and then it came back down. And so right here, one stop is right at the open. It went up here, came back, you get stopped out for maybe 10 pips. Okay. But right here, you see it came into the upper wick zone of this candle here. And then it came back out. So Actually, the price action, you would have stopped out right here, which was still above the open, but you see the candle reversed. So if you're playing the price action off of that, using that candle, you're saying, wait a minute, it's going the other way. And then here, when it exited, you could have taken a wick zone trade off of that previous candle. Come down here, you see confirmation on the short, you could have added on, and then all of a sudden it comes back. Then you would either scratch the trade, that second trade, the first trade would have been in profit right there, and you could then right here exit that trade and bank just a handful of pips. So I hope that's clear. So even within these systems like the buy zone, you can then basically overlay a wick zone and trade the price action. So you can use the wick zone for either profit taking, or telling you when to scratch the trade, even that might not have gone to the full stop. Okay, and you can see here we've got the rat zone is only 39 pip range. We're not trading the rat zone. And you can see here we have, it's hard to see here. Wow, everything's scrunched. Let me drop down. It's really compressed. You can see here that the pivot was right here, right near the open. So there wasn't much of a pivot trade or pivot fade trade at all. Just wasn't there today. Some days, some methods, you're just not going to get a trade, and that's just how it is. Once again, you can see here the open was so close to the pivot, it had to take it out. Okay, we're talking price action. Now, once again, defining price action using the candle. So, if we start with this candle, what happens here? Price broke out of the previous candle. Take this candle, what happened? Price broke out. Now, some people say that's not a real breakout. It's only a couple pips. If it breaks out by a point, it's a breakout. We don't get the hedge on the definition. Here we go. We had another breakout. Here we had range bound within this candle. Here we had a breakout. Here we had a breakout. Here we had a breakout slight. Here we had a breakout to both sides. And here we had another slight breakout. That's price action. That's the only thing price can do. It either stays within the range of the previous candle or it breaks out of the previous candle's high and or low. That's price action. You can't break it down any simpler, and anything else just complicates it. So we can see here, we're just taking trades at the line with the H1 candle color. And as always, there's going to be pips to be made. Sometimes a little, sometimes a lot. Sometimes you get stopped out. That's trading. And you can see here on the wick zone, price doesn't like staying in the wick zone. And so, once again, if you apply the same logic, price is either going to stay in the zone or it's going to exit it. Well, guess what? It exits the wick zone usually over 70% of the time when on the daily. Maybe I should bring up those frequency distributions in another video, maybe tomorrow. Holo, highest open, lowest open. Once again, price almost always exits. Almost never, the end of the day, closes within a holo zone. Either the highest open, lowest open. No, just doesn't happen. And you can see here, you had the whole low, the lowest open happened to be at 110, double O or triple O if you want to count the points. And you can see what happens at that line. Then it almost hit the 110.25 psychological level, and you can see what happened from there. And I've had the computer on for a while, and you can see, once again, we're going to talk price action. Okay, how can price go up? Price can go up when the bid price goes above the lowest ask price in the cycle or the wave or whatever you want to call it. So you see right here, price crossed the bid crossed above the lowest ask and price started to go up. Here, price slightly dipped below the peak of the bid, only slightly, just for a second there or tick, and then it continued the upward movement here. So that is price action at the tick level. That's my definition because of something I observed watching tick charts. Because if you just look at a pure tick chart, if you hit F9, you can do it. You see what happens here? Right here, when the bid got above the lowest ask, price did what? It started to go up. Okay, and you can see right here, price just went below there, and what's happened? Price is starting to do what? Come down. And to me, that's price action at the tick level, using when you look at the spreads. Because you always wonder, it's just like, why is it when I enter, price always moves against me? Instead of it going, if I buy, what happens? And price starts to drop. If I sell, what happens? Price starts to rise. Why does that happen? Because you're not trading with the ticks. So that's why I came up with that. Inventory reduction bars. You can see here there was a short, there was a nice long there. And that's, once again, why I came up with this. So this is telling me what's happening at the tick level. Okay? So I can see here, we don't have, I was thinking maybe I should change this instead of buying and selling. I should call it rising and falling. But, people, I think traders understand buying and selling. So right there, you can see it's oscillating between selling and waiting, selling and waiting. Because if it's not buying and we don't have selling, we have basically indecision. So we're waiting for something to happen. And you see here, we just had selling right there, no hairy hindsight, and you see prices dropping. And so far, it's dropped by 1.7 pips from here down. That was the max. So you can see here, you can use this for scalping. Very pinpoint accurate. And you see here, it reversed. Einstein lines. This is when I turned the computer on. It started, or I actually had the computer on before, but I had to switch to my video profile. So you can see here what happened relative to the line. Once again, using buying and selling. So, fellow traders, that's price action. So remember, it's not what you trade, it's how you trade it. It's time to drain the banks.